Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Hello and welcome. I think we're in for a really insightful session today as we unpack Microsoft's latest earnings call that's for fiscal year 2025, the fourth quarter. Now, I know what you might be thinking. Earnings call, lots of numbers. And yeah, sure, we'll touch on the financials.
Of course.
But this isn't just about reading out figures. It's really about pulling back the curtain on what's happening in tech right now.
Yeah, understanding the bigger picture.
Exactly. Where is innovation truly speeding up? Because it feels like it's happening at breakneck speed, especially, around artificial intelligence.
Absolutely. That was the theme, wasn't it?
It really was. We heard straight from the top at Microsoft, Satya Nadella, CEO, Amy Hood, the CFO.
Jonathan Nielsen from IR2 and others.
Right. So our mission today, really, is to distill the most impactful stuff. The insights, maybe some surprising facts, and the strategic direction Microsoft is heading in.
Especially with their huge bets on AI.
Huge is the word. And why should you, listening, care? Well, because what Microsoft is doing, these developments, they could impact so many industries.
Oh, definitely. Business operations are changing.
Fundamentally. And even just how you use technology day to day. It's like a sneak peek into the very near future. So let's dive in.
Let's do it.
Okay, so first things first, let's just ground ourselves in Microsoft's overall financial health, fiscal year 2025. And honestly, the numbers look incredibly strong.
They really do.
Total annual revenue, over $281 billion. That's up 15% year over year. Pretty robust.
15% on that scale is massive.
It really is. And operating income saw 17% growth year over year, passing $128 billion.
Healthy growth there, too.
And then just looking at the last quarter, Q4 performance was, well, exceptional across the board. $76.4 billion in revenue, up 18%.
18%, wow.
Operating income jumped 23%. Earnings per share up 24%, hitting $3.65. Now, these are big numbers, obviously. But what do they really mean in the bigger market context?
Yeah, what's the story behind the numbers?
Well, what's compelling is that this isn't just like a couple of good quarters in isolation.
Right.
It really points to deep momentum, something systemic in your business model. And if you connect this to the bigger picture, look at commercial bookings.
Okay.
For the first time ever, they topped $100 billion in a single year. That's a 37% increase.
37% increase in bookings.
Incredible, isn't it? And it wasn't just luck. They said it was strong execution on their core annuity sales, lots of renewals, plus a noticeable jump in those really big contracts.
A mega deal.
Exactly. Over $10 million, even over $100 million deals for both Azure and Microsoft 365. And this flows directly into what they call remaining performance obligation, or RPO.
RPO, right. The backlog.
Precisely. That increased to a, frankly, astounding $368 billion.
$368 billion.
Yes. Think of RPO basically as future revenue that's already locked in, it's contracted, money that's kind of in the bank, but not yet counted as sales because the services aren't fully delivered yet.
So it's committed future income. Exactly. And about 35% of that huge number, that $368 billion, will be recognized in the next 12 months. And that short-term chunk alone is up 21% year over year.
Okay, so strong near-term visibility.
Very strong. And the rest, the part recognized beyond 12 months, that grew even faster, up 39%. So this massive growing backlog gives them amazing predictability for future revenue.
That makes sense.
It points to sustained growth, a really sticky customer base. It basically acts as this powerful buffer against, market ups and downs, lets them plan and invest with real confidence.
So if I'm getting this right, it's like they've pre-sold a huge chunk of their future business.
Yeah.
And that money's basically guaranteed, even if it's not on the books yet. That's a heck of a safety net, isn't it?
It absolutely is. More than a safety net, it's really a testament to the trust businesses are placing in their whole ecosystem.
Right, locking in those huge multi-year deals.
Exactly. And another thing reinforcing that stability, their annuity mix. It stayed incredibly high, 98%.
A 98% annuity.
Yeah, meaning almost all their revenue comes from recurring subscriptions or long-term deals, not just one-off sales. It's a super strong indicator of stable, predictable income. Makes them very resilient, lets them invest long-term with more certainty.
Okay, that paints a picture of real stability.
And then, of course, the start of the show, in many ways, Microsoft Cloud hit $168 billion in annual revenue, growing at 23%.
23% cloud growth overall.
Yep. And for Q4 specifically, cloud revenue was $46.7 billion, up 27%. Now, you might spot a slight dip in the cloud gross margin percentage. It was down 2 points to 68%.
Okay. Why was that?
Well, this is key. It's directly because of the massive scaling of their AI infrastructure. That needs huge upfront investment, hardware, power, data centers. It costs money.
The AI investment starting to show up.
Exactly. But Amy Hood, the CFO, was quick to say this was partly offset by efficiency gains they're still finding in Azure and M365 commercial.
So managing the cost even while investing heavily.
Right. But that slight margin dip, it really introduces the central theme of the whole call. Microsoft's super aggressive strategic investment in AI, it's a deliberate trade-off, invest big now for future growth, even if it's slightly dense short-term margins.
It sends a strong signal, doesn't it?
A powerful one. AI isn't just another feature for them, it's becoming the defining thing for their future.
That's a perfect segue. Because these numbers, they show strength, but they're also telling this much bigger story, aren't they? This massive re-engineering of Microsoft towards an AI-first future.
Absolutely.
And right at the core of that, pumping the lifeblood for this new era, is Azure. It's not just growing, it's clearly the backbone for this whole AI revolution.
It really is.
It passed $75 billion in annual revenue, growing, was it 34%?
34%, yeah. Impressive.
And crucially, gaining market share all year long. That's not just growth. It's leading in a super important, rapidly expanding market.
And the scale of what they're building underneath that, it's almost hard to comprehend the strategic foresight in their Azure infrastructure investments. Let's dig into some specifics there.
Okay, give us the details.
First, the global data center expansion. It's just unprecedented. New data centers opened across 6 continents. They now have over 400 data centers.
400.
In 70 regions. That's more than any other cloud provider out there. And it's not just about bragging rights.
No, it's about latency, data residency.
Exactly. Serving customers closer, meeting local rules. Imagine just managing that global footprint, the complexity.
Yeah, that alone is staggering.
And it's not just the number of sites, it's the raw capacity. Satya Nadella mentioned, all the industry talk about gigawatt data centers.
Right, these huge power demands.
And then he just sort of casually dropped that Microsoft alone brought online more than 2 gigawatts of new capacity in the last 12 months.
2 gigawatts in 1 year.
Yeah. To put that in perspective, a gigawatt can power like hundreds of thousands of homes.
So they're building the equivalent of small power grids just for computing.
Essentially, yeah. It shows they're leading the pace in scaling this stuff up, building the physical foundation for AI at a scale nobody else is matching right now. And they need that capacity because AI compute demand is just exploding.
2 gigawatts. Mind-boggling. It sounds like you're building digital cities almost, dedicated to compute power and faster than anyone else. But you mentioned making every Azure region AI first. What does that actually mean day to day? How does it link to Nadella's idea of compounding S-curves?
Good question. AI first isn't just marketing fluff. It means practically that all their AU regions now support liquid cooling.
Liquid cooling. Why is that important?
It's vital for the really intense computing needed for modern AI, especially these dense GPU clusters. They run hot. Liquid cooling boosts what they call the fungibility and flexibility of their whole fleet.
Fungibility, meaning interchangeable.
Yeah, basically makes the hardware more adaptable, more efficient for different AI jobs. Think of it like having, a universal adapter for everything, or a kitchen that instantly reconfigures for any type of cooking. It makes resource use much better.
Okay, more efficient use of expensive hardware.
Exactly. And that flows right into Nadella's compounding S-curves idea across silicon, systems, and models. Imagine one S-curve is like the adoption path of a new chip. Starts slow, takes off, matures.
Right, the standard tech adoption curve.
Now imagine Microsoft isn't just riding one S-curve. They've got multiple ones going at once for chips, silicon, how they build the infrastructure systems, and how they design the AI models themselves.
Okay.
The compounding bit is key. They're not just running side by side, they actively boost each other. So an improvement in chips makes the systems run better, which lets them train more complex models faster, and so on.
So it's like a multiplier effect. 1 + 1 + 1 doesn't equal 3, it equals like 5 or 6?
Precisely. It leads to continuous, almost exponential gains in efficiency and performance. And here's a concrete example they gave. Just through software optimization, no new hardware, they're delivering 90% more tokens for the same GPU compared to a year ago.
90% more output from the same chip, just with software.
Yeah, specifically for models like GPT-4o doing inference. That shows the incredible power of their software smarts and squeezing more out of the hardware. It means they can scale AI without constantly needing the very latest, most expensive supply-constrained chips.
That's a huge efficiency lever.
Huge! And beyond just performance, they're also tackling those big customer concerns around data residency and sovereignty. They launched Microsoft Sovereign Cloud this quarter.
Sovereign cloud. What's the focus there?
They called it the industry's most comprehensive solution for both public and private cloud needs, where data, location, and control are paramount. Absolutely vital for governments, regulated industries, anyone needing data kept within specific borders or under local control.
Removes a major adoption hurdle for those sectors, right?
Definitely. And all these innovations, they're directly fueling strong results in customer migrations. They said migration growth accelerated again this quarter.
Any big examples?
Oh, yeah. Nestle. This was massive. Nestle moved over 200 SAP instances, more than 10,000 servers, 1.2 petabytes of data, all onto Azure.
That's enormous.
And here's the kicker. They did it with near zero business disruption. Nadella himself called it one of the largest, most successful migrations in business history, moving the entire digital core of a global giant like Nestle smoothly. That screams capability.
Wow, that showcases Azure's strength for sure.
And they're even looking way further ahead. Quantum computing. They announced the world's first operational deployment of a level 2 quantum computer with a partner, Atom Computing.
Level 2 quantum. That sounds significant.
It is. It shows their long-term vision. Beyond the current AI boom, investing in foundational tech that could reshape everything decades from now. It's about making progress quarterly, but thinking in decade-long arcs, as Nadella put it.
Okay, that level of detail on the infrastructure is, well, it's profound. So Azure is the engine room. Raw power, global reach. But an engine needs a sophisticated vehicle, right?
Right.
That seems to be where Microsoft's strategy for the data and application layers comes in. And they talked a lot about something called Microsoft Fabric.
Yes, Fabric is crucial.
Tell us about that. How are they building the AI application layer on top of Azure?
You hit it exactly. The data layer is fundamental. Every AI app needs knowledge, needs grounding. Microsoft Fabric is designed as the complete data and analytics platform for this AI era.
Complete how?
It spans everything, SQL, NoSQL, analytics workloads. It basically unifies all these different data silos.
Yeah.
And the momentum. It's undeniable. Revenue up 55% year over year.
55% for Fabric.
Yeah, and over 25,000 customers are using it already, making it the fastest growing database product in Microsoft's history. That's saying something in such a crowded market.
Fastest growing ever for them. Wow.
And a key piece of Fabric is OneLake. Think of it like a single unified data lake.
OneLake.
Okay. It brings together data from all sorts of databases, different clouds, even semantic models from Power BI. Why does that matter? Because it becomes the central, trusted source of knowledge for grounding AI apps, for what they call context engineering.
Grounding AI meaning making sure it's based on facts.
Exactly. So the AI isn't just making stuff up or hallucinating. It's working with relevant, accurate enterprise data. OneLake provides that unified foundation.
That seems critical for enterprise trust.
Absolutely essential. And beyond Fabric, their core databases on Azure are also seeing faster adoption. Azure Databricks, Snowflake running on Azure, Cosmos DB, Azure PostgreSQL, all powering mission-critical stuff.
Okay.
And here's a really telling example they shared. OpenAI itself. They rely heavily on Microsoft's databases.
OpenAI uses Azure databases.
Heavily. Cosmos DB is used in the hot path, the critical real-time data flow for every single ChatGPT interaction, storing chat history, user profiles, conversation state, all in real time.
So the core of ChatGPT runs on Cosmos DB.
A key part of it, yes. And they use Azure PostgreSQL for critical metadata behind ChatGPT and their APIs. It's a massive vote of confidence in the reliability and scale of Microsoft's data services when the leading AI company builds on them.
That's quite the endorsement. Okay, so Fabric and OneLake provide the data foundation. Azure provides the compute power. How do companies actually build the intelligent AI applications on top of all this? What's this AI factory concept?
Right. That's Azure AI Foundry. They launched it this year. Its whole purpose is to help customers design, customize, and manage AI applications and agents at scale.
So like a toolkit for building AI.
Exactly. Think of it as an AI factory, like you said, or a really comprehensive workshop. Foundry offers best-in-class tools, solid management features, observability so you can see how your AI is performing, and crucially, built-in controls for trustworthy AI.
Trustworthy AI addressing the safety and ethics concerns.
Directly. It helps enterprises deploy AI responsibly, securely, within their existing rules. And what's really unique about Foundry is its multi-model ecosystem.
Multi-model, meaning not just OpenAI models.
Precisely. Customers don't want to be locked into one AI provider. They want choice, flexibility, use different models for different jobs based on cost, performance, whatever. Foundry lets them provision their compute power once and then use it across a whole range of models.
Which models?
OpenAI, of course, but also DeepSeek, Meta's Llama, xAI's Grok. And soon, they said, models from Black Forest Labs and Mistral AI. This flexibility, this vendor neutrality, is a huge advantage in such a fast-moving field.
So you choose the best tool for the job, basically.
Exactly. And the speed they integrate these models is remarkable. They talked about SIM shipping. 15 OpenAI models this year.
SIM shipping.
Yeah, it basically means same-day integration, like a ready-to-use software module. Customers get immediate access to the latest models, deeply integrated, no waiting.
That's fast.
It is. And they're seeing rapid uptake of their new Foundry agent service, too. 14,000 customers are already using it to build agents that automate complex tasks.
Any examples of what these agents do?
NASDAQ was one they mentioned, using Foundry to build agents that help clients prep for board meetings. Apparently, cutting prep time by up to 25%.
25%. That's a
Yeah.
real productivity gain at a high level.
Definitely not trivial. And the adoption is broad. 80% of the Fortune 500 are already using Foundry. And get this, for scale, they processed over 500 trillion tokens this year.
500 trillion.
Up over 7 times from last year. That kind of growth shows it's not just a few big companies using it heavily. It indicates real platform diffusion. AI is spreading across tons of different use cases, optimizing processes, automating workflows everywhere.
It's truly incredible how fast that infrastructure and data layer is scaling and getting adopted, transforming how businesses run.
Whoa.
Okay, but let's shift gears now. Let's talk about the AI applications that, you and I might actually touch and feel day to day.
The co-pilots.
Exactly. The numbers here are also pretty staggering. Microsoft's family of Copilot apps. Over 100 million monthly active users now across commercial and consumer.
100 million MAU for Copilot apps.
And if you look wider at AI features across all their products, that jumps to over 800 million monthly active users.
Yeah.
That's immense reach for AI embedded in everyday tech. Makes it feel less sci-fi and more like an everyday tool.
It really does. The reach is remarkable. Let's start with Microsoft 365 Copilot. Satya Nadella calls it the new way to organize work.
The new way to organize work.
Okay. This quarter, they rolled out their biggest update yet. It unifies chat, search, creating stuff, notebooks, agents, all into one interface. Trying to make it a truly intelligent sidekick for your daily grind.
Integrating it all together.
Yeah. And the momentum seems clear. Customers are adopting it faster than any other new M365 suite they've launched. Usage intensity is strong, good week-over-week retention, meaning people try it and stick with it.
So it's sticky. People find it useful.
Apparently so. They had the biggest quarter ever for adding new seats since launch. Record number of customers coming back to buy more seats, too.
Any specific customer examples?
Yeah.
Big rollouts.
Oh, yeah, some huge ones. Really underscore the enterprise commitment. Barclays. Rolling out M365 Copilot to 100,000 employees globally.
100,000. Wow.
UBS is expanding to all employees after starting with 55,000. And then you have giants like Adobe, KPMG, Pfizer, Wells Fargo, each buying over 25,000 seats just this quarter.
Okay, those are serious commitments. Not just pilots anymore.
Exactly. It shows companies are seeing real value and deploying it workforce-wide. And it's not just general use. Specialized agents are taking off fast.
Specialized agents, like what?
Things like researcher and analyst agents that do deep reasoning. Tens of thousands of organizations apparently use these in just the first few weeks they were available. Shows immediate demand for that kind of specialized AI help.
Interesting.
And they've got new group-level agents for teams, things like facilitator and interpreter.
Interpreter, like real-time translation in meetings.
Yeah, real-time translation, automated notes. It shows AI moving beyond just my productivity to improving how the whole team works together.
That's fascinating. So AI isn't just for me anymore. It's enhancing the whole team dynamic. What about the ecosystem? Are other companies building on Copilot? And can customers customize it?
Absolutely, on both counts. The ecosystem is buzzing. Hundreds of partners, big names like Adobe, SAP, ServiceNow, Workday, they're all building their own third-party agents that plug right into Copilot and Teams.
So Copilot becomes a platform itself.
Exactly. Extends its usefulness way beyond just Microsoft's own apps. And yes, customers are actively using Copilot Studio to tweak M365 Copilot and build totally custom agents.
How many are doing that?
They said customers created 3 million agents this year using SharePoint and Copilot Studio.
3 million custom agents.
Yeah, it lets them fine-tune the AI on their company's specific data, their workflows, even their unique jargon or style. Make the AI behave exactly how their organization needs it to.
Okay, that level of customization is key for adoption.
Definitely. Now, shifting to specific roles, developers, they're seeing a massive shift with GitHub Copilot.
Yes, the coding assistant.
That now has 20 million users.
20 million developers using it.
Yep. And GitHub Copilot Enterprise customers grew 75%, just quarter over quarter, as companies tailor it to their own internal code bases. And 90% of the Fortune 100 now use GitHub Copilot.
90% of the Fortune 100. Developers must love it.
Seems so. And the evolution is interesting, too. It started with just code completions in your editor, right?
Yeah, smart autocomplete.
Then they added chat, then an agent mode for bigger tasks, and now even an asynchronous autonomous agent called Coding Agents.
Autonomous. Like it codes on its own.
That's the implication, handling more complex tasks independently. It mirrors the broader trend of AI becoming more embedded and taking on more complex workflows.
Right.
And the overall impact on GitHub usage, they called it explosive growth. Due to AI projects on GitHub more than doubled in the last year.
Doubled. So developers are flocking to AI projects.
Seems like it.
Yeah.
Generating more pull requests, more repositories, and their code review agent is being used heavily, doing millions of code reviews every month.
So AI isn't just writing code, it's checking it too.
Exactly. Improving quality, efficiency, freeing up human developers for the really tricky creative stuff.
Okay, what about other fields? Healthcare?
Big story there, too. Dragon Copilot had a breakout year, they said.
Dragon Copilot, that's the medical dictation one.
It's evolved into an ambient AI solution. Helps doctors with documentation, cutting down that admin burden. Customers used it to document over 13 million patient encounters this quarter.
13 million in one quarter.
Yeah, up nearly 7 times year over year. And the impact is huge. Mercy Health System. Over 1,000 doctors using it, saved over 100,000 hours already.
100,000 hours saved.
And they're planning to roll it out to all 5,000 of their providers. One doctor was quoted saying it was the best thing to happen to my practice in 10 years.
Wow, that's freeing up doctors to actually doctor.
Exactly. Huge win for everyone. AI is also hitting security and business apps hard.
How so?
Microsoft introduced industry-first agents to help security teams autonomously handle high-volume tasks, critical in today's threat landscape where analysts are swamped.
Automating security responses.
Parts of it, yeah. And in business applications like CRM and ERP, there's a clear shift away from old legacy systems towards agentic business applications. Apps with AI agents built in to automate workflows offer proactive insights.
Making business software smarter.
Right. Dynamics 365 is gaining share, winning big clients like Verizon for sales, Domino's Pizza Group for ERP, 1-800-Flowers for their contact center, all powered by AI now.
Okay. And on the consumer side, where are we seeing Copilot?
Pretty much everywhere Microsoft operates. They put Copilot mode in the Edge browser bundling Composer, Chat, Discover, Search, Actions, trying to build the next generation browser for the AI age.
Integrating it into browsing.
Yep. The standalone Copilot consumer app is seeing strong engagement growth too, and Copilot is now baked into every Windows 11 PC.
On the desktop itself.
Yeah, including cool features like Copilot Vision. You can share your screen with Copilot, and it gives you real-time insights on what you're looking at, like a visual helper. And with Windows 10 end of support coming in October, they're perfectly positioned. Windows 11, these new Copilot Plus PCs, offering better security and all this AI value as reasons to upgrade.
Making the upgrade compelling with AI features.
Exactly. Seamless integration into your daily computing.
It really is clear that AI is weaving itself into, well, everything. Work, daily life, through these copilots and agents. Developer desks, doctors' offices. But this whole huge connected system must rely on a really strong foundation of security, right?
Oh, absolutely critical.
And then beyond that, Microsoft has these other big pieces, LinkedIn, Xbox contributing too.
Yeah.
How do they fit into this AI-first picture?
You're spot on. Security isn't just an add-on, it's foundational. It underpins everything: the cloud, the AI infrastructure, every copilot, every agent.
They must be investing heavily there, too.
Relentlessly. Over 100 new security capabilities launched just in the past year. One big thing is adding a modern data lake to Microsoft Sentinel, their SIEM tool.
Sentinel,
Mm-hmm.
the security monitoring platform.
Right. This new data lake pulls in data from Microsoft's own tools and over 350 third-party connectors. Gives security teams this incredibly comprehensive view, a single pane of glass for all their security data.
Bringing it all together.
Exactly. And what's really crucial is how they're extending their existing security tools, governance, identity, data protection, to cover these new AI agents and apps.
Because agents need managing, too, right?
Absolutely. They're dynamic, potentially vulnerable. So Entra, their identity system, now extends permissions and policies to agents. Defender secures nearly 2 million general AI apps already.
2 million AI apps secured by Defender.
Yeah, protecting them, ensuring they operate safely. And Purview for data protection and compliance. 3/4 of M365 Copilot customers are using it to safeguard sensitive data when using AI.
So security is wrapped around the AI.
Tightly integrated. All told, they have nearly 1.5 million security customers now, still gaining market share. It shows their leadership in this super critical area where AI is both a tool and a potential target.
Okay, that makes sense. What about LinkedIn and Xbox?
Well, LinkedIn just keeps growing impressively. 1.2 billion members now.
1.2 billion.
Yeah. 4 straight years of double-digit member growth. Engagement's way up too, comments up over 30%, video uploads over 20% this year. And they're integrating AI agents there too into hiring and sales tools, making it smarter.
Adding AI value to the network.
Exactly. And then there's Xbox and gaming, huge entertainment arm, 500 million monthly active users across platforms.
Have a billion gamers.
And they were actually the top publisher on both Xbox and PlayStation this quarter.
Top publisher on PlayStation, too.
Yep. Shows the strength of their studios and their games like Forza Horizon 5, Oblivion Remastered. Call of Duty. Never been stronger, they said. 50 million people playing Black Ops 6, over 2 billion hours played total.
That franchise is just a monster.
It really is. Minecraft also hit record usage and revenue, helped by the movie's success, and they have nearly 40 games in development, so the pipeline looks strong.
Lots more content coming.
Loads. Cloud gaming is growing to over 500 million hours streamed this year. And Game Pass, their subscription service, hit nearly $5 billion in annual revenue for the first time.
$5 billion from Game Pass. The Netflix for games model is working.
Seems to be working very well indeed.
Okay, so Microsoft is clearly, as you said, firing on all cylinders. AI is getting embedded everywhere. Enterprise, consumer, and these other businesses add incredible breadth. But what about looking ahead? How do they plan to keep this momentum going, especially with these, frankly, enormous investments in AI? Let's talk fiscal year 2026 outlook, the financial strategy. What did the CFO say about things like FX impact?
Right. Amy Hood gave a pretty detailed look ahead for FY26, crucial for understanding their strategy. First, on foreign exchange, or FX. Assuming current rates hold, they actually expect FX to boost full-year revenue and COGS growth by about 2 points.
So a tailwind from currency.
Looks like it, yeah. And about a 1-point boost to operating expense growth. It's important because it means the underlying business performance is even a bit stronger than the reported numbers might suggest once you account for currency effects.
Okay, good context. What about the overall outlook?
Building on this past year's momentum, they expect another year of double-digit revenue and operating income growth in FY26.
Double-digit again.
That's the expectation. Their confidence comes from, leading in commercial cloud, the strong demand signals they keep seeing for cloud and AI, and that huge $368 billion backlog we talked about.
That backlog provides a solid foundation.
Exactly. Now, interestingly, operating margins expected to be relatively unchanged year over year.
Unchanged, even with all the spending.
Yeah, which is a key point. It signals that despite the massive capex pouring into AI infrastructure, they're managing costs and finding efficiency gains elsewhere to basically offset that build-out on the margin line.
That's impressive financial management.
It suggests it, yes. And speaking of capex, capital expenditures, that was a big focus. Capex growth is expected to moderate a bit compared to FY25.
Moderate, okay.
With a bigger slice of the pie going to short-lived assets, things like servers, GPUs, CPUs, networking gear, storage, the stuff they need to deploy quickly for AI compute.
The actual compute hardware.
Right. And for Q1 of FY26, the first quarter, capex is projected to be over $30 billion.
$30 billion in one quarter for CapEx.
Over $30 billion, driven by those continued strong demand signals. Hood did emphasize, though, that quarterly spending can bounce around a bit based on when infrastructure gets built or leases come through.
Timing issues.
But here's a critical point. She acknowledged that even with all this new capacity coming online, they expect to remain capacity constrained through the first half of the fiscal year.
Still constrained, even spending $30 billion a quarter.
Apparently so. Demand continues to outpace supply. That really tells you something about the sheer scale of the market appetite for AI infrastructure right now.
It really does. It's like an AI gold rush. And they're selling the picks and shovels, but can't make them fast enough. But when they spend that much, $30 billion in Q1, how much is long-term investment versus just meeting immediate demand?
That's a vital question, and Hood addressed it. She reassured investors that over half of their CapEx is actually for long-lived assets.
Like what?
The data center buildings themselves, the land they sit on, core networking infrastructure, stuff that will support monetization for 15 years or more.
Ah, so it's not all just servers that get replaced quickly.
No, a significant chunk is foundational long-term investment. And she explicitly linked these huge investments back to that $368 billion contracted backlog, assuring people the spending is tied to real committed business and long-term strategy, not just, speculative bets.
Okay, connecting the spending to the future revenue.
Precisely. The message is, these are calculated long-term investments in what they clearly see as the main growth engine for the next decade.
Right, and how are they actually monetizing all this AI? What are the models?
It's still evolving, they said. They're seeing a mix. There's traditional per-user pricing, like for Copilot seats, then more flexible tiered per-user models, maybe linked partly to consumption, and pure consumption models where you just pay for the AI compute you use.
So a few different approaches.
Yeah, and they expect a blending of these as AI capabilities get more granular. Teams might be able to throttle usage, pick the best model for a specific task to optimize cost and performance.
More control for the customer.
Seems to be the direction. And Satya Nadella gave this really interesting perspective. He suggested AI will drive an order or two of magnitude more growth in compute usage.
An order or two. Yeah. So 10 to 100 times more compute demand?
That's what he's suggesting. He compared it to the server to cloud shift. Cloud didn't just move existing workloads, it massively expanded the total market by making compute easier to access, more flexible.
Right, it enabled new things.
Exactly. And he sees AI doing the same thing for intelligence, making it more accessible, more flexible, driving this huge, unprecedented surge in demand for compute. It's not just optimizing old stuff, it's enabling totally new stuff.
That's a big vision. How are they managing margins through all this growth and investment?
Well, their focus isn't purely on cutting costs. It's primarily on delivering really innovative, competitive products that win market share. That top-line revenue growth, they argue, is the most durable way to improve margins long-term.
Growth drives margins, essentially.
That's the philosophy. Plus, they emphasize applying their software expertise to make the hardware more efficient. That 90% token game on GPUs is the prime example.
Getting more out of the hardware they buy.
Right. Continuous efficiency gains across the whole stack, even while building out infrastructure like crazy. And of course, attracting and keeping top talent to build these products in the biggest markets. That's key to staying ahead.
Okay, makes sense. Did they give specific guidance for the next quarter, Q1, FY26?
They did, segment by segment, quickly. For productivity and business processes, that's Office, LinkedIn, Dynamics, they expect revenue between $32.2 and $32.5 billion. That's 15% growth.
Strong growth there.
M365 commercial cloud growth around 14% constant currency, driven by people upgrading to E5 and adding M365 Copilot seats, that's higher average revenue per user, or ARPU. LinkedIn, high single-digit growth. Dynamic 365, high teens growth.
Okay. What about intelligent cloud? Azure?
Expected revenue of $30.1 to $30.4 billion. That's 25-26% growth. And Azure itself. Q1 revenue growth expected around 37% constant currency.
37% for Azure.
Yeah.
Still massive growth.
Huge demand continues. Though the flip side is the on-premises server business is expected to decline low to mid-single digits as customers keep moving to the cloud, which is part of the plan.
Natural shift. And the last segment, more personal computing.
Revenue guided between $12.4 and $12.9 billion. Windows OEM and devices down mid to high single digits, partly due to some high inventory levels out there. Search and news advertising, low to mid-teens growth, kind of normalizing after some partnership benefits boosted things previously. And gaming. Revenue expected to decline mid to high single digits overall.
Gaming down. Why is that?
Xbox content and services specifically declining mid-single digits, but mostly because they're comparing against a really strong quarter last year. So a tough comparison makes the growth look softer.
Ah, the comp issue.
Exactly. So overall, the outlook is continued strategic investment, continued growth, but heavily weighted towards AI and cloud. That's clearly where they see the biggest opportunities.
Wow. Okay, this whole conversation, unpacking the earnings call, it really paints a picture of a company that isn't just investing in AI, it's fundamentally re-architecting itself around it.
That feels right.
The sheer scale of the data center build-out, the innovation in Fabric and Foundry, the way co-pilots and agents are spreading through everything, it's truly remarkable.
It is. The pace is incredible.
It really makes you wonder, doesn't it? How will this continuing diffusion, as they called it, of AI agents and co-pilots change your daily life, your professional tasks, your personal ones, in the coming year?
Yeah, what will it look like day to day?
Will documents just write themselves? Meetings summarize automatically? Code debug itself? It really feels like we're on the edge of a pretty significant, maybe deeply personal shift in how we all interact with technology. Something to think about. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.